Welcome to the second in a series of videos about the basics of Forex. In this video, we're going to explore the anatomy of a Forex quote, and we're going to explain such terms as the bid and the offer, the spread, and pips and fractional pips. So do keep watching to the end of the video so that you get to hear about all those different terms. Hello, I'm Peter Martin with Trading 212. We add educational videos about the financial markets and about trading to YouTube regularly. If you haven't already, make sure you subscribe to our YouTube channel because that's the easiest way to learn when we've added fresh content to YouTube. Well, in our previous video, an introduction to the Forex market, we looked at an example of the euro against the British pound exchange rate. In this video, we're going to look at a different currency pair. We're going to look at the euro against the US dollar and use that as our starting point to explore a Forex quote. So let's take a closer look at euro against US dollar. So the euro against the US dollar. In our previous video, when we looked at exchanging British pounds into euros and then back again, we said that currencies are represented by three-letter codes for the currency, and that for the euro it was EUR. And we said for the pound it was GBP. For the US dollar, it's USD. All quite straightforward. We write it with this slash in the middle. And euro against US dollar is the most traded currency pair in the world. So it's the most important currency pair in the Forex market. It has the highest volumes. And when we write a currency pair like this, the first named currency is what's known as the base currency. So in this case, that is the euro. We write it with this slash, and then the second named currency, the US dollar in this case, is known as the counter currency or the quote currency, or sometimes as the secondary currency. When we have an exchange rate for a currency pair, whatever that might be, let's say it's 1.2000 or something like that, this is the number of the counter currency that you get for 1 unit of the base currency. More often than not, when a currency pair contains the US dollar, the dollar usually goes first. The exception, though, is when it's against the euro or the British pound, and for those, the convention is usually to quote the euro and the pound as the base currency and have the US dollar, as we have it here, as the counter currency. They can be quoted either way, though, and which round it is vitally important because that defines the rate. And if you are buying a currency pair, you are buying the first named currency and you're selling the second named currency. So you need to pay attention to which way round it is being quoted. So having introduced the euro against the US dollar currency pair, let's take a look now at how euro-dollar looks within Trading 212's web app. Here I am in Trading 212's web app, and I'm looking at a chart of euro against US dollar. Now what I'm going to do is just right click here and click Open Detailed Trade Books, just so that we can look at the price that we can trade at for euro against US dollar. So I've clicked on that and we can see that there's a sell and a buy price, and they're slightly different prices. The sell price is 1.1218 with this little 2, and then the buy price is 1.1219 with this little 4. So with this ordered ticket, there's all sorts of things going on, lots of things to look at, but for the time being, all that I'm really interested in is the price you can sell at and the price that you can buy at. And we call this the bid and offer. So let's take a closer look at these two prices and what they mean. So the bid is the price that you can sell at, and it is always the lower of the two prices in a quote. The offer, sometimes also called the ask, is the price that you can buy at, and it is always the higher of the two prices in a quote. And the difference between the bid and offer is what's known as the bid-offer spread. We can see here that the size of that spread is 0.00012. If we add that number onto this bid of 1.12182, then we end up with this offer price of 1.12194. Now, we said in the previous video where we introduced the Forex market that the core of the Forex market is the interbank Forex market, a kind of wholesale level of Forex trading where very large banks are exchanging currencies with each other. In the interbank market, the primary banks will have market makers providing prices at which these banks are willing to take deals in various currencies, for example, euro-dollar, as we have here. One way that a market maker may turn a profit is from the spread that they quote. So let's just take a look at a very simplified example to try and illustrate this. So let's say that this is a market maker and this bid offer quote that we've already been looking at is the bid offer spread that they're quoting. Implied in this is that there is a midpoint between this bid and offer. And that may or may not represent the actual euro-dollar rate, because the market maker may be pricing this cheaply to try and attract buyers, or pricing this slightly more expensively to try and attract sellers. But for the purposes of simplicity, let's just say that they have priced their quote exactly where they think the exchange rate actually should be, and that they've just applied a bid-offer spread around it. Now, let's say then that they have a buyer at the offer in size X, and then next they get a seller at the bid in size X, the same size, exactly the same size. If these are the only two orders on their book that they've taken, then they themselves, this market maker, has no exposure at this point to the exchange rate, but they have collected this spread that we said was 0.00012 multiplied by that deal size X, and they will have collected that as their profit. So that's the bid offer spread. Now, the increment in which prices move is important. Conventionally, in the Forex market, Forex prices were quoted to a certain number of decimal places, and the last decimal place under this convention was the smallest increment in which prices could move, and this was called a pip. So let's take a closer look at pips and also fractional pips. So with pips, we need to look at what was the conventions in the Forex market. Now, for euro-dollar, the price that we've been looking at, conventionally that was quoted to 4 decimal places. So we might look at a quote that was 1.1218. This last decimal place, the smallest increment in change you could have would be a 1 point change in this, a 1 pip change. So if it went from 1.1218 to 1.1219, that's increased by 1 pip. Or if it went down to 1.1217, that would have been a decrease of 1 pip. With online brokers these days, you tend to get an extra decimal place, and that's referred to as a micro pip or a fractional pip. In the case of the quotes we've been looking at, we had a 2 here and we had a 4 here, but these are not pips, they're fractional pips. Looking quickly within Trading 212's web app, again, this is a trade box again for euro against US dollar. And if you look at the quotes here, you'll notice that the number as they are shown in the web app, they're presented with the numbers in different sizes. Some are much smaller than the others, some are larger. So this is to help you recognize pips and micro pips and another thing that's called the big figure. So let's take a look at that. This is a representation of how a Forex quote shows in the app as we've just been looking at, and this is the same bid offer quote that we've been using throughout the video. So this small number here is the number of fractional pips. So this is the 5th decimal place for euro versus US dollar. It's 0.2 of a pip that we're looking at here. So 1 pip is the change in the 4th decimal place, as we've already said. But you'll notice how the 3rd and 4th decimal place are the largest numbers that we can see here. And this represents the conventions of how these numbers are talked about in the Forex market. So this is 18 pips that we're looking at here. On a Forex trading floor, this quote, without bothering with fractional pips, might just be given as 18 at 19. And you might be expected to have a handle on what is known as the big figure, which is this part here. So if the price increased from 112.18 to 112.48, we would say that the price has risen by 30 pips. I hope you enjoyed this exploration of the anatomy of a Forex quote. If you did, please take a moment just to hit the thumbs up button and give us a like. Or why not share your thoughts with us on the subject by sending us a message in the comments section. We do read each one. Join us next time when we'll be introducing more currency pairs and we'll be taking a look at some examples of some Forex trades. But that's all for now from me, Peter Martin, and Trading 212. Thanks for watching. Goodbye.